Good evening. This is the Elliott wave update for the S&P 500 for Sunday, November 14th, 2021. The S&P is opening in Globex this evening higher and thus far has reached 4689.50 before retracing just a very little bit. But what that has done, it has forced a change in the count. And I just want to start by saying that that is what I've done because that is what the market is telling me. But what I want to include, no one is wrong. I'm not right, I'm not wrong. I was following what the market was telling me, and at the point when I was making the decisions on the labeling, it was because of the count. When the market changes that and shows me differently, because again, this is a fluid market. I'm updating it on an Elliott basis daily, and I'm working on a very short-term count that is a part of a much larger, longer-term count. So nothing has changed. We just have not reached the end of this longer-term bull market advance, but we remain in the finishing stages. That much I'm very sure of. How far they want to extend it seems to no longer have any effect on fundamentals, but more on technicals and human emotions of bullishness and bearish and what's acceptable, what's not, and what gets forced and what isn't. So it's down to a very technical picture for me. And also included within that is that it's more algorithmic. So this has all been programmed in, and it's really premium plays. And so much of it could be on just that it's a short squeeze, and due to the options and how they're trading and what that actually forces in the end. So again, we remain in a short squeeze, and we see that the market has sort of gapped higher to start the Globex session and is holding higher levels. So what that did is I went back and I had labeled this at least the completion point for the minor 5, the intermediate 5, and the primary degree 5th wave. That I've taken back. This 5th wave did end up, as I go back and review, it also extended. So we had a 3rd that extended and then the 5th that extended. And that is, as I've been saying, is something that I'm noticing as we walk through these final advances. They are being extended in several different places, which is now becoming more the normal than it is the abnormal or the off one or the anomaly. So the 5th wave got moved up here, and that was the minute. So again, we were counting a minor, an intermediate 5th wave up, which consists of 5 waves of minor degree. And I had labeled it 1, 2, and I put the 3 here, the 4 here, and the 5 here. Well, the 3rd wave extended, but within that 3rd wave, it was the minute 5th wave that extended as well as the 3rd. So make an adjustment, puts the minor 3rd wave completion here at 4711.75. And that decline that we had that ended last on the 10th at 4625, that is the minor 4. So we're within the beginning stages, or within the first legs up of this minor 5th wave up. I'm going to drop this quickly down to the hour and just continue on that thought. So within this, we can see that maybe, come on, let's try. No, all right, going to go down to the 30. That's how I'll see it. There we go. So within this 5th wave, as best I can count it, there's wave 1, wave 2, and then 3 begins. Wave 1, 2, and then once again, 1, 2. So we have basically 1, 2, 1, 2, 1, 2. So we have a series of 3 first and second waves. So now, 1, 2, 3, 4, 5, 3 of this third. And then we're going to get a 4 and a 5, and that'll be the 3 of this one. And then we'll get a 4 and a 5, and that'll be the 3 of this one. So we're going to get a series. Now, since we have 1, 2, 1, 2, 1, 2, we need a series of 3, 4, 5. And I'll bring it back down. And so this will be 1, 2, 3, and then we have a 4 and a 5, and that's going to be to complete this 3. Then we have a 4 and a 5, and that's going to be to complete this 3. Then we will do another 4 and a 5 that'll complete the entire sequence. So we do have a series of 3 4s and 5s to complete. So we're on our way to do the first, and then we have another 4, 5, and that'll be the second. Then we have another 4, 5, and that'll be the third, and that should end it. Now let's see where Fibonacci tells us this can go. What I'm measuring out first is this little bit larger third wave. So this is minute 1, minute 2. So we're in minute 3 and it's subdividing. So where can I expect minute 3 to complete? I would suspect that we're going to get up to 47.15. We'll make that first high, new high, and that should be without too much hesitation or problems. And then we're going to have a small decline, maybe back to 04, maybe back down just below. And then we'll do another 5th wave up. And that will be on, this will be 1, 2, and this will be the third, and then a 4 and a 5, and that's going to be the second third. And then we have one more, 4 and 5. So we'll get here, complete the 3, a 4 and a 5 to complete the next level. Maybe that gets us up to 47.31, because the next level, I would say we probably have some resistance at the 47.50 area, but on a Fibonacci basis, the next level is 4,800. So I'm suspecting that this will contain the 3, and then we'll have another 4 and a 5, and that last one has the potential to take us up to 4,800, let's say. Now, normally, and I'm going to go back out to the hourly chart so we can take a look. Often, when we're considering Fibonacci relationships, a Fibonacci relationship exists between a 5th wave of a sequence and the 3rd wave of the sequence. So, whoops, sorry. There's wave 3, here's wave 4, we're in wave 5. So I ran extensions, the length of the 3rd wave. I'll go back up here. So the 3rd wave started down here, ran it up to the top of 3, down to the bottom of 4. That gives us these levels on this side. And so wave 5, and when in relationship to wave 3, on a Fibonacci basis, can work quite often, it will rally or come in as complete at 62% of the length of that 3rd wave. Well, 62% takes us up to 49.02, right? That's where this 5th wave will be 62% of that 3rd wave, 49.02 or 4,900. So for the entire wave 5, that's the potential. But then we have strong, what should be hopefully strong, but again, market's never been here. So if there's a strength for the buying, then it just could go right through, because there's going to be such a lack of sellers, because there's no reason to sell. So the squeeze could really just push things to even a much higher level. And we need to expect that, because the real key here is, it brings into mind a very old saying, and you're going to realize that I'm dating myself by the terminology. And the saying that when I first began as a market maker, that you were told constantly by the older traders, don't fight the tape. Don't fight the market. And basically, if the market's intent is that for whatever reason, it's going in a direction, don't fight it. So don't try to pick a bottom. Don't try to pick a top. Just trade with them. And, so if you're being into a selling position up here and you're going to need to position it, well, then you better do so, and you need to hedge it. So if you're already a market maker, or you're deciding that you're going to sell it at 4,800, well, I'm going to hedge that trade. So either I'm going to do it by all options, which could force a squeeze in and of itself, or I'm going to hedge it future-wise by using options. So bear all of this in mind. These are possible levels, but it seriously is not. I don't think that it's going to be attachable to, well, because the market's bullish because of this. We're going to read about it. They will come up with stories on why. But when we're going against the backdrop, even a technical analyst will tell you, we're reaching a top. And right now it's a squeeze. And you can see, this is the 1-hour chart. Look at the squeeze. Squeeze is pretty intense right now. So because everybody, they need futures. So whatever the reason, they need them. So we have that potential. Or tomorrow, I really do believe that we will continue higher. I'm looking, more than likely, it should not be a big ordeal for the market to get up to 47.11 and get up to that 47.15 resistance zone. Finish the third, come down in a fourth, come back up in a fifth, and finish the third, and then down again, and then up. So we should be able to extend pretty much up into this zone, up towards that 4,800 area. And if the push really gets severe, midweek, towards the end of the week, because don't forget, next Friday is another weekly expiration. So that's the other thing. A lot of these positions, they all expire. They're done on a weekly basis. If you can't get it rolled out, or if you can't do anything with it, then you have to do, you're going to get stuck in a position that you're going to have to settle. So numbers, they're there. Possible? Yes. Probable? Don't know yet. But I'm definitely thinking, I think we can pretty much feel, oops, I'm going in the wrong direction, I apologize, that the market should be able to get itself to 47.15. That I see, and it would not put it past happening tomorrow. Beyond that, well, we'll just use the Elliott. And we should be able to put some additional parameters around it to give us additional levels on an upside move. So I'm going to leave it. The next update is Monday, the 15th.